Well, my next guest has a front row view of how the consumer is doing. Let's bring in Matt Schulz. He's chief credit analyst at LendingTree. Matt, welcome.
Thanks for having me.
We want to respond to what you heard there. So, we asked a broad basket of questions about the economy and everything else, and it just kept coming back to inflation. It's specifically food inflation, gasoline we heard about, and obviously just kind of this general unease about the environment.
Yeah, what I just heard doesn't surprise me at all. The truth is that even in the best of economic times, the average American household's financial margin for error is pretty tiny. Then when you factor in inflation, especially inflation on things like groceries and gas and the fundamental things of life, it really takes a big toll. And then you add in higher interest rates and things like that. It's a tough time for a lot of people.
That said, the big picture data seem to be telling one story, while the sentiment data are telling, although the sentiment data have improved as well. But big picture, we keep hearing, bank accounts are 30% higher than pre-pandemic. We haven't run through excess savings yet. The labor market is still strong. So it doesn't paint this picture of hardship.
Yeah, it's such an interesting time because you're right. Even generally speaking, from the banks, we've heard that the consumer is doing pretty well. That's starting to change a little bit. We've seen some banks in the last little while talk about credit card delinquencies in particular spiking. But what I get the feeling is what is happening is that people are generally doing okay. They're generally handling their business, but they're not that far from being in a little bit of a dicey situation, whether that's obviously a job loss, medical emergency, things like that. The margin for error is pretty thin.
So in the housing market, where usually, kind of on the front lines, but so many people have fixed mortgages and very few have been purchasers during this high rate environment, where, if anywhere, do you see higher rates starting to bite consumers?
Well, rates are starting to bite consumers all over the place. And really what it's done is it's changed the calculus for a lot of people, because somebody who was thinking, a couple of years ago, this is about the amount of house I can buy, or this is the amount of car I can buy, they've had to change that because interest rates play such a huge role and are so fundamental to those costs that it's ended up leaving a lot of people disappointed, settling either for not buying a house, not buying a car, or settling for less than they originally thought that they'd be able to. So that's a discouraging thing for a lot of people.
Do you think there's any cushion from the fact that people are making money on their cash now for the first time in years and feeling like it's almost a stimulus check?
Yeah, no, I don't think there's any question that the yields that people are getting on these high yield savings accounts is making a really big difference. For as much negative as there's been about interest rates, there's no denying that these high yield savings accounts where you can get 4 or sometimes 5% is really significant, especially when you're talking about in American households where that extra % or 2 over time can really, really add up and can make a difference.
Yeah. Anything else you want to mention? Because I did notice that you said consumers do have a little bit of bargaining power. I mean, when you can actually call and lower your credit card interest rate, if I'm not mistaken. Is that right?
Yeah, it's something that I preach all the time. And LendingTree did a survey about earlier this year talking about how 76% of folks who asked for a lower interest rate on one of their credit cards in the past year got one, and the average reduction was about 6 percentage points. So that's like going from 25% to 19%. It's a really significant thing. And those success rates that we're seeing, which we've seen for years, even going back pre-COVID, are an indication that it's not just folks with 750 credit scores and long track records that are getting their way on this. It's regular folks too. So it's absolutely worth making that call.
All right, a good nugget.